Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 12th. I'm going to take just a brief moment to discuss what markets did last week as we had another big sell-off in the equity markets last week as the S&P 500 was down 4.25%. A big correction in the S&P 500, and you had the mid-cap index as measured by the S&P 400 down 4.92%. And the small caps as measured by the S&P 600, not surprisingly, were the worst of the bunch, down 5.4% on the week. And what we had been discussing leading up to last week and leading up to the weeks that we were going to be dealing with some volatility, and of course that has come to fruition. But what I want to talk about is what's causing the volatility. And again, a little bit more into detail about what I was talking about last week on how to position yourself as you're navigating through the volatility. And as we headed into this week, well, all eyes, of course, were on this last month's inflation report. We got CPI and PPI this week for the month of August. And those came in a little higher than expectation on the month over month. The headline number year over year at 2.5%, of course, gives the Federal Reserve Bank cover to make a 25 basis point cut when they meet this month, and instead of maybe a 50 basis point cut. Core CPI was still above 3%, and that's kind of, you saw the market dip at the beginning yesterday and it's been recovering ever since. You saw the market today off of PPI, which is Producer Price Index, start off lower, work itself higher. Now these are very, very positive signs in the market. When the market starts low or starts positive, dips lower, and then works itself back throughout the remainder of the day, that's telling you that there's more buying pressure than selling pressure in the market. So there, even though there's that big drastic volatile dip down and the recover back, there's still people saying, okay, I'll buy that there, I'll buy that there. So what does that tell us about this time? It tells us two things. It tells us that we need to be opportunistic. And what does that mean for you as the investor? Well, that means you need to have some cash on the sidelines to deploy quickly when bargains become available. This market is moving so quickly and so volatilely that you need to be prepared at a certain price point to move and execute on certain equities. The other thing to consider is, with all of this volatility, sitting on cash, not a bad thing for the portfolio. You miss out on the downside when you're sitting in cash. You're not participating on days when you're going down. So you're reducing the volatility within your individual portfolio, missing some of the downside. And then when opportunities present itself for stocks that you've been wanting to buy or thinking about buying, and they come down to a price point where you say, I just can't not buy that there. None of us can time bottoms perfectly. I'd love to tell you that we do it perfectly at River Place. No one does. We don't have a crystal ball any clearer than yours. But what we're doing is taking our hard work, years of experience, and putting that to work for our clients. And that's what is moving, and that's what's going to help our clients move forward. But for you individually, how does that work? And that's, again, cash to reduce volatility. You can deploy that cash when stocks become more affordable, or when you've identified become affordable to you. Position yourself. It's okay if you don't time right at the bottom and you go down a couple percentage points here or there. That is perfectly okay, because again, I'm reiterating my point. No one's going to time it perfectly, but if you could get something 20% on sale, it's a good deal. And so be opportunistic, be cautious. What's causing this volatility is not just the lead up to the presidential election. Well, that's going to draw headlines and that's going to be a lot of it. What's boiling under the surface is the U.S. economy is slowing, and investors are deciding and going back and forth between, are we slowing so much as we're going to enter into a recession, or are we just slowing to a more normalized growth rate, what we saw maybe pre-pandemic level, where the U.S. economy is going to continue to move forward, but just not at a gangbusters pace, an unsustainable pace. So if you have questions, again, about how to navigate the volatility that we're going to see through the next couple of months, feel free to give us a call. We'd love to talk to you about how to handle that. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.